Good morning. I'm Krista Gardner. I'm a partner with SEK. I live in York and work out of our York office, and I split my time pretty much 50-50 government nonprofit. So this is what I live and breathe day in and day out, and I'm excited to be here. Following up with Erin, obviously she spoke about audits and all different types of engagements. I'm going to spend a little bit of time talking about, okay, so you get an audit, which most of you in the room do. What are some things to be thinking about a little bit differently when it comes to preparing for your audit? And then how can you work with your auditors and utilize your audit as a tool for your organization? So jumping in here, steps for preparing for your audit. So my first two slides here are all about making it a year-round process. And I know an audit is a necessary evil. We put it off to the last minute. And sometimes we don't prepare until the end of the year or even after year end when we start calling and bugging for things. But it really is a year-round process. And a couple of things that might make that just a little bit easier are your internal controls, your processes, your procedures, what changes throughout the year. I have some people who have a little notebook that they keep by their desk or their computer that they just make notes and jot things down as the year goes on. Or ask us if you don't already have, we have a whole internal control document that we use for our audits where we're documenting your processes, your procedures, your key controls, who's involved in those processes. If you don't have a copy of that, feel free to ask for a copy of that because you could be making changes or notes on that document as the year goes on. Because that's usually the first thing we're going to ask is what has changed, what's different. And then you can pull that out and say, hey, I got that ready for you. It's not always going to be that easy, but something just to be thinking about throughout the year. Also, changes in bank accounts, employees. So not only making sure that we're documenting any of the HR changes in relation to employees, but how does that impact your processes and procedures throughout the year? So not just check signers, but even who's opening the mail, who's recording transactions, etc. So making sure that you're thinking about how just one employee change or even someone going full-time to part-time can have an impact on those processes and procedures that you rely on as an organization. And then you don't have to wait until audit time to reach out. Reach out to your auditor as much as you need. I actually enjoy hearing from clients and try to reach out throughout the year, but it's also kind of a selfish thing because if there is something, a complex transaction, something that's unusual, let's take care of it at that time. That's nice for us because then things, once we get to audit, it's not all crammed into one time frame. But then also, if it impacts your financial information, so if it's, hey, I have a question on how to do a journal entry, rather than waiting until audit time, let's talk about it now because then your monthly or quarterly financials are going to be more up to date or more correct that you're giving out to management or the board. So it's kind of a both way selfish thing. Like, let's take care of those items as they come up. So never hesitate to be reaching out. And that's even just like, hey, we're looking at starting a new program and this question came up at our finance committee meeting. What are your thoughts on that? Have you seen this anywhere else? Totally acceptable. And also keeps that conversation going throughout the year just to keep things more relevant and hopefully more efficient for both sides. Other things that you might want to reach out about if you're purchasing a building or any other kind of large fixed asset. I talked about change in programs. If you would be going out for any kind of debt or line of credit, even any changes in investments, things just to be reaching out and giving a heads up on. Grants are a big one, especially in this climate where there's been lots of funding sources being thrown around and received by many organizations. And how do they work together? How do we have to keep things separate? That's been a lot of conversations that we've been having outside of audit time. And then just operational changes. Did you add a new program? Did you add a new location? Things just to be thinking about to you might not impact the audit, but for us, again, from that procedural standpoint, really understanding how the organization operates, that's important to us as knowing those changes. So then digging into a couple of audit specific areas based on that financial activity is timely reconciliations. Now, I know almost everyone already is reconciling their accounts in a timely manner, but there are some that we always kind of put to the side and say, I'll get to it. But again, all of that will continue to build up once you get to year end if it's not done throughout the year. Bank accounts come to mind as, okay, yes, we're all reconciling our bank accounts. But other items that you might not be thinking about are prepaid expenses, deferred revenues, things related to any of those additional grant sources that we're getting. Let's make sure that we're tracking those, reconciling those as we go throughout the year. Fixed assets is a big one. We usually get to audit time and we'll ask for, okay, do you have any additions for the year? Do you have any deletions? And sometimes we get that blank stare on, I don't know. And so that's another thing that can easily be kind of a trigger event, like, okay, we sold something. I'm going to make a note of that. Or, you know what, we got this grant, we're going to purchase something. So having all that supporting documentation together. Also, if you don't already have a list of your fixed assets from the most recent audit, please feel free to ask for it because you can be making notes on that list or that report throughout the year. And then getting others involved. So this is one of those areas where I feel like there's more than one person that's usually involved in this fixed asset process because you might have different programs, different locations, different departments that are purchasing items that fall under that fixed asset category. And then the other item I'll just throw out there is just taking a look at your policy. And this is really any policies that relate to your financial activity, thinking about them at least annually. Do they still make sense? Do we need to make changes? The capitalization policy, does it still make sense that our capitalization policy is 500 or should it be 5,000? I have those conversations pretty much every year during the audit. Does it still make sense? And as your organizations evolve, as they change, shift, etc., you might find that another policy is going to be more meaningful. Journal entries. So throughout the year, if there's any journal entries that are being completed, trying to make sure that there is an approval process. I know that's not possible in every organization, the smaller our staff is, but at least trying to have some sort of approval or review process related to journal entries, and then also supporting documentation. So I was just done an audit recently. We gave a list of journal entries that we had to test as part of the audit. And the support that I got back was the printout of the journal entry. And I said, no, I need the backup of how you got to that, where that journal entry came from. And that wasn't something that they automatically had together. So they really had to backtrack and recreate the wheel. So usually journal entries are going to be those out of the ordinary type transactions. So while you're doing it, while you're putting all that time and effort into it, making sure that's all compiled in one location or filed that you can easily get to it. In-kind donations, Aaron actually mentioned about in-kind donations. And so these are going to be all of your non-cash items. And every organization is going to be different, particularly whether or not you're on the accrual basis of accounting or cash basis of accounting. But anytime you're getting donated assets, and that can be anything from a donated vehicle, a donated building would be awesome, all the way down to a gift card, a donated gift card. I have an organization that they do a gift card drive and get lots of gift cards. All of that should be tracked. Obviously, a gift card, if it's a $50 gift card, it's worth $50. But if you get something else that is donated, we want to be asking the donor for the value of the item. We want to be tracking it. And then also make sure that you're working with your development team to be sending out thank you notes, receipts, etc., just like you would for a grant or a cash donation, but tracking all of those items because one, they're needed for not only the audit procedures, but also potentially your financial statements, dependent on what your financial statements look like, and then also possibly the 990, depending on your organization. So that's another item that's kind of left off until we usually ask about it. So those in-kind donations. Year-end accruals, some of them are just going to be year-end accruals, and they are just going to happen at year-end, and that's okay. But also be thinking about, all right, if we're adjusting payroll at year-end, are we reversing it at the beginning of the next year? Should we be doing a monthly accrual? Hand in hand with this is depreciation. A lot of organizations will wait till year-end during the audit process to record depreciation. Some will record it monthly based on an estimate. What are you doing? Does that still make sense? Again, we kind of get a little static in some of our financial transactions because there is a lot going on, and we understand that. But just kind of repeatedly asking ourselves, does it still make sense? What else could we be doing here? And then I've kind of hit on this, but keeping supporting documentation. So throughout the year, whether your organization is paper, electronic, or some hybrid in between, which I think is everyone. I like electronic things, but then I've got this whole pile of sticky notes on my desk that somehow I keep organized. So however it is that you can keep track of things, again, you don't want to recreate the wheel. So however you're coming up with calculations, any kind of documentation, making sure that we're keeping it at hand rather than trying to put it all together at year end. So then jumping further into the next 3 slides are all about restricted funds and grants. And I'm going to not get too far into the weeds because Greg actually will be digging into grants a little bit later this morning. But again, some areas to be thinking about throughout the year. So, restricted grants or restricted funds, don't wait till the end of the year to be trying to track everything, see how you used it. As you're getting restricted funds in, come up with some kind of method on how we're going to track receipts of those restricted funds, pledges of restricted funds, how we're going to track the uses. Is it manual on an Excel spreadsheet, which is totally fine? Lots of people do that. Are you creating separate GL accounts in your general ledger as far as tracking those receipts of restricted funds and how you're using them? Whatever that process is and how it works for you and your team is fine. Just make sure that you're doing that throughout the year and not waiting until year end. One item that we run into quite a bit is the communication between your development person or team and your accounting person or team. And again, depending on the size of your organization. But where this comes up a lot is pledges. So sometimes we'll have a great development person out there just getting a lot of money for the organization and getting people to pledge. And sometimes those pledges aren't going to be received until later fiscal years, but the pledge is not then communicated to our finance or our accounting team. And again, based dependent on your basis of accounting, if you're accrual basis, as long as there aren't any contingencies related to that pledge, we're usually going to be recognizing that pledge and the related revenue when it occurs. So that's something we want to make sure that there is some sort of communication between those two people or departments, that everything's being tracked. Also, we want to make sure if someone pledges money to us and maybe we haven't received it or heard from them, let's check up with them. Let's check in, make sure we're still going to get that pledge. Because then on the other side of things is when we have pledges recorded, we have restricted funds that we haven't yet received or in receivables, are we still going to get those? And this is one that it's usually going to be yearly. We're going to be looking at the end of the year. Hey, we have receivables for XYZ. Are we still going to get them? Are they still likely? And usually, as part of the audit process, if they're significant, we're even going to confirm those receivables. But you also don't want any surprises. So you don't want a $25,000 receivable on your books. We ask you, like, are you going to collect that? Yep, all's good. We've talked to the donor. We send a confirmation. Hey, are you going to pay them $25,000? And we get something back that says, oh no, I've already paid them all but five. So we want to make sure again that there's this tracking. So if we do have receivables on the books, when we're bringing money in the door, it's getting applied appropriately in our general ledger. And then also the restricted piece of it. So if we are receiving restricted funds, whether that's via a grant or a donor, however it's restricted, we want to make sure that everyone is understanding of that. So not only is the development person who maybe put together a budget with someone from, one of your programming departments, if you sent a request to a donor and then they for a specific program or function, and they then give you that donation, if you said to them, hey, we'd really like a donation for this program, and they give you a donation, well, essentially it's then restricted for that program. So we want to make sure that that communication is happening throughout all of our departments. And that can be development, that can be accounting, that can be programming, that can be management. Everyone kind of plays a role in managing those funds. So making sure that we're tracking that, we're understanding of that. And the same thing with, if a donor just gives you money and says, hey, I want it to go towards this program, make sure that's being communicated and tracked. Because at the end of the day, the worst thing that we want is for a donor to come back and say, hey, can you just give me, some information on how you spent that money? And we say, I'll get back to you. And then we kind of have to put it together, or we come back to them and we didn't quite spend it the way they thought that we were going to. Usually donors are pretty understanding, but we never want negative comments to come out. We don't want to lose a donor, and then donors usually have friends. So people talk, and one little slip up could really impact an organization negatively. So again, it's just so important to be tracking those restricted items up front and understanding if there are any other requirements related to restricted funds. Do you have to send them a report? Do you have to have any follow-up items, etc.? So making sure we're keeping track of that. So then digging into grants, pretty similar to the restricted funds, but from the grant standpoint, grant contracts. So I know they can be very voluminous, but making sure that as soon as we're even talking about getting a grant, we're asking questions. We understand what the grant can be used for, how it's used, We are making sure that we're looking at, what the sources are. Are there additional requirements related to those funds, how they're coming in, timeline of the funds. So this is not only when are we spending the funds, do they have to be obligated by a certain time point, meaning do they have to be under contract? Can we then actually pay them out over additional time? Is there any carry forward opportunities? So if we get to a year down the road, can we reach out and carry forward some funds into our next fiscal year? And then how are we getting the money? Is it here's a $50,000 check to be spent on XYZ, or is it reimbursement? And this can really play into, I'm saying 50,000, but sometimes these are numbers that are a lot larger where there might even need to be some cash flow planning on, hey, we've got to spend the money first, and then we've got to submit for reimbursement. And sometimes we can get to the point where we're looking at bridge loans if we've got some pretty large grants that are coming out, big projects. And so really just that cash analysis, understanding of, okay, we're getting the money up front or we have to actually submit for reimbursement. Double dipping is one thing that has come up a lot the past 2 years with all of the COVID money, the CARES Act, the PPP, ERTC, and a bunch of other acronyms that I'm forgetting right now. But this is one where it's always important to just be making sure, again, when we're documenting throughout the year how we're spending the money. And the area where this really kind of rears its ugly head is payroll, because a lot of times restricted funds, grants, different programs are going to allow for payroll. And a lot of our organizations, that's our largest spend is payroll. We're providing services, we're conducting programs, etc. And so often we'll have people that work for us and their benefits that can fall under several funding sources. So we want to make sure that we're tracking that because, again, we can't be double dipping. And this is something that is usually going to come up during an audit where we're going to be testing to make sure that, hey, if you've got several grant sources and you've got several people that fall under, how were they charged? And making sure that there isn't any duplication of charging to different grants. Because we, again, don't want to get ourselves in a situation where we've run out of time to spend the funds otherwise and now have to go back and say, hey, we messed up here, we need to return funds or ask for forgiveness, because sometimes that does happen. But it's definitely best to try to track all of those items beforehand so we don't have to get to that point. Reporting requirements, making sure that we're looking at what needs to be reported, to who, when it needs to be reported, what needs to be reported, because every grant can be different. Thankfully, they're all along the same lines, but again, just making sure that we're taking a look at that grant contract. And I'll tell you, I keep saying document, but documentation is my theme here, keeping track of how things are spending. And sometimes there's an interpretation that has to happen. And if you're looking at a grant and maybe it's a little gray, document that interpretation. Say, hey, this is how we spent the money because of XYZ. Again, we don't want to have to recreate the wheel when someone like me starts asking questions during your audit time. And then hands in hand with that is going to be federal grants. So a couple of quick reminders. A single audit under uniform guidance is required if any organization spends $750,000 or more during their fiscal year. So this is all federal funds together. So again, make sure we're tracking the sources of our funds that are coming through the door. And this is going to be based on what is spent. So you get $1 million in the door, but you only spent $500,000. You had $500,000 of federal expenditures, even though you received $1 million. So it's all based on when you spend the money, and it's based on your basis of accounting. So if you're cash basis or accrual basis. So things, again, just to be thinking about as you're receiving those funds and using them. And then in addition to, we have all, some additional requirements with different grants. When it comes to federal grants, you may have to have a single audit where you might have to have compliance testing. So that's testing of making sure that you're using the money on appropriate purposes, how you're spending the money is appropriate, how you're reporting is appropriate. And then with each of those compliance requirements comes internal controls. And so making sure that the controls are in place, and then those are also tested during any federal grants audit. So with that, I am going to jump on to my next section here, which is going to be, all right, so we have to have an audit. It's a necessary evil. How can we look at the audit and work with our auditors to really be fruitful for our organization, be a tool in our tool belt for our staff, management, board, volunteers, etc., kind of looking at the organization as a whole? How can we utilize this process to our best ability? So the first thing is working with the auditor, taking a look at the audit process. What's the timeline on the audit? So I always like to work backwards with my clients and essentially say, okay, when do we have to do a presentation? What are our deadlines? If you've got your normal Pennsylvania or Maryland state filing requirements, or if you have federal requirements, but you also might have donor requirements or national organization requirements. So always kind of working backwards and saying, all right, when do we have to have things done? Who are we presenting to? Who do we have to meet with? And then work backwards as far as when will things be ready? When can we schedule field work? And sometimes it's a fluid timeline and it just happens. And luckily, we try to be as flexible as possible. The past 2 years have proven to be a little bit difficult with everything going on, but obviously trying to set those goals and expectations on both sides is really what's important. And that's the next piece there is expectations. So, we look at doing an audit as a team effort. We want to be part of your team as much as we can be with being independent, but really be that resource for you, and setting expectations for how to get through that audit is key. And that really comes down to, who's going to be providing what or preparing what when it comes to schedules, financial statements, etc., even down to your 990. If your staff takes part in preparing the 990s, journal entries, what are the expected journal entries that one might be coming to us after we get the trial balance, because that happens often. And then also, what are the expected journal entries that you're going to rely on us as the auditor to prepare or propose during that audit time frame? So it's always good to kind of go back to the year before and say, okay, here's where we ended up. Is that our expectation for this year? What are things that we maybe can tweak and change? And then really how it's going to happen. And this usually comes down to access to people, access to documentation, and then really just sharing of information. And we all do things differently. Some of us are completely, electronic, some are completely in paper, and then a lot of us are in this hybrid. We're trying to use a lot of electronic means for sharing information, especially these past 2 years. We're not sitting at a seat at your office as much as we used to. And in some places that works great. In some places it doesn't work as well. And it's totally okay to be upfront about that. Hey, we really feel like we'd like you to be a little bit more on site, or you know what? The fact that you did everything remote was awesome for our team and it works well. And not that we don't want to see you, but we're cool with doing it remote going forward. And, that's something that we're definitely open to as far as, however works best for you and your staff. So then moving forward from there is best practices. So a lot of this stuff comes up during the audit. Obviously, we talked about internal controls and processes and procedures. One of my favorite things I always hear is, hey, we were thinking about doing this. What do you think? And I get really excited when I've seen it somewhere else and I can share, hey, it worked for these people. Or I'd even be willing to give you their information to talk about how they implemented that. Or sometimes it's like, well, this organization tried it and it didn't work so well. You want to talk to them about why it didn't work well? Obviously, things are different for every organization, but that's kind of the cool thing from our side is we get to work with lots of different nonprofits in various industries and of various sizes and get to kind of share some of that knowledge as far as how things work well. And then also continuously bring up ideas for how you might be able to improve or best practices. And it's been a big conversation, especially with COVID and people going remote and trying to keep our controls in place and keep the best processes that we absolutely can have. And even if we're not starting the conversation as your auditor or whoever your auditor is, don't be afraid to be asking that question as far as what can be changed, what audit results from the past can we be improving on. Again, it's all expectations. How do we expect our audit to go? And what different types of things might come up. And this brings me to the hot topic items. So I always try to ask, especially before giving a board presentation, all right, so what's the board been talking about? What's the finance committee been bringing up? Is it reserves? Is it budgeting? Is it, our program results are not great. How do we improve them? So this is something to also just kind of keep a pulse on. You're hearing it a lot from board members and finance committee members. What are their concerns? What are those hot topic items? Reach out to the audit team and just kind of say like, hey, here are some concerns our board has had. What insight do you have? I just had a conversation with an organization yesterday where there's some pretty interesting budget discussions and disagreements, I will say. And they reached out to me and they said, is there anything that you can provide in writing There's the key in writing to help us with this stance. And of course, I have to say, I can't because I have to be your independent auditor, but I can have a conversation and be more than happy to be that resource to not only staff, but also the board. If there's any questions or really just want some additional understanding of the financial activity, the financial well-being of the organization. And then in addition to that is the industry. What's going on in your industry? It's kind of the beauty of the nonprofit world is we all have different industries within nonprofits. And so really just trying to keep a pulse on what's going on. What are those hot topics? What concerns are you hearing from your peer organizations that maybe you just want to chat about as you're going into your next audit or even throughout the year in between audits? Another area where the audit can be used is going to be education and training. So this is at all levels. So your board members, a lot of times there's some financial literacy, I'll say weaknesses sometimes where we're like, man, the board just doesn't get it. And work with your auditor on that. Ask for the audit presentation to maybe go a little bit deeper, really explain in more detail what their financial statements mean, even what the 990 means. That's the kind of fun part for me is I like talking accounting to non-accountants and really seeing that light bulb click where people start to understand like, all right, here's what our financials are telling us, and we're making some big decisions based on that information. So kind of bringing everything full circle where people are really understanding the multitude of how their decisions impact the organization. And that really even trickles down to not only management, but also your staff. A lot of time you have staff that are doing programming or providing services that really don't see that financial picture. And sometimes just maybe annually taking a look at, all right, here's our audit results. Here's what our organization looks like. And bringing people into these are why sometimes we have to make the decisions when we want to make, because ultimately we want to try to give as many services as possible or have as many people impacted by our programs. And so sometimes it's not just the day-to-day providing those services or holding those programs. It's looking ahead and making sure that the organization is going to be around for long term. And our staff aren't always involved in that. So again, the audit can be a part of that process. And then donors and volunteers. So, from a donor standpoint, some of them are going to ask for your 990. I mean, your 990 is public, so anyone can go out and look for that. So also taking a look to make sure that how you want to tell your story is what that 990 is saying, but also your financial statements. A lot of grantors or donors might ask you for your financial statements. So again, you want to make sure that although you're all reviewing and approving your financial statements, that you're really taking that magnifying glass and making sure that, hey, what's in there makes sense. And always asking the question, could we add more? Maybe it's that you want to be telling more of your story, have more information about your organization, your programs. So never hesitate to be asking that kind of information of your auditor. And then also just portraying to volunteers what it is you do, why you need volunteers. A lot of times our programming does not keep us going. And we need those donations, those contributions, those members, and those volunteers to keep the mission going. And that's where it's kind of nice to bring everything forward and tell that story with the numbers. And not everyone understands them, but if you can guide people through, hey, this is how our organization is operating, and this is the health of our organization, maybe you can pull some more people in. And that brings me to my last slide, which is all about kind of looking forward. So obviously we get an audit almost every year for those of us that are required to. How are we going to look going forward? So using that tool to really take a look at cash flow. How can we be preparing to better ourselves in the future? Is there investing opportunities? Is there room for growth as far as additional program services? Do we have a goal that we're trying to reach with a program? Essentially just kind of planning ahead to make sure that we're liquid, we can take care of what we need to right now, and we'll be here going forward. With that comes different trends and future planning, weaknesses. A lot of you are going to do strategic planning that goes along with your mission and your vision of your organization. And then succession planning. Are there any, internal succession plannings that need to be talked about that can impact your financials? And also looking ahead, are you going to be planning for a new location? Are you going to be adding a bunch of additional employees? So making sure that, again, you're looking at those financials to help you prepare for that. And then essentially the last one is the operating and programming analysis. So how are we doing? Do we have 5 programs and one of them is just continuously not making it? And do we have an understanding of that? And maybe it's okay. Maybe that's part of your structure. We've got one program that just is fantastic and can carry along these others. But it's really good to make sure you're having those conversations, because a lot of times I'll be in a meeting and I'll hear someone say, like, wow, I never knew that before. So making sure that you're having those conversations, and they can be tough because you don't want someone to say, we shouldn't be doing that program. But at the end of the day, making sure everyone's on the same page as far as what the organization looks like now and what it looks like going forward.